I want to take a quick look right now at crypto prices this morning. Joining us right now is Michael Novogratz, Galaxy founder and CEO. Bitcoin sitting at just about 116 bucks. ETH, which has been on a wild ride, now at $3,831. Michael, help us understand what is going on exactly.
Bull market. Enjoy it while it lasts. Never does. We're in a bull market. Trump last night came out and talked about crypto assets being eligible for 401ks. I mean, that's a monster pool of capital. And what we're just seeing is through these treasury companies, through all kinds of different avenues, the aperture of being able to buy crypto being widened and widened and widened. More avenues bringing people into the tent. I think one of the things that I actually didn't even comprehend is these treasury companies have done so well. The public equity markets are so much bigger than what the crypto markets were. And so as we're really broadening our reach through public equities into our asset class, you're just seeing tons of money pour in.
When you understand what the president was talking about with 401ks, how do you think that's going to happen in practice? Are people going to be able to buy Bitcoin directly? Are they going to just be buying Bitcoin ETFs? Are people going to be able to buy levered versions of all of this? I mean, that's when it gets more interesting. Or not more interesting, but that's when
the devil's in the details. But you're going to see funds. I mean, the simplest thing is a Bitcoin fund, an ETF. But I think the devil will be in the details. There were already some people that were out there before this was happening, finding ways to do that. But again, it's when it becomes commonplace, when you can do it at your old, the place you've already been doing business with. If it's Fidelity or T. Rowe Price or whoever it is, you just pull more people into this ecosystem.
And so you don't think it's really about people necessarily, buying Bitcoin directly anymore? Do you think it's going to be via, I guess the question is, over time, how are people really going to be accessing this? And the reason why I think that's important, I think, is it sort of depends on what you think Bitcoin actually is.
So I'm in the lane that Bitcoin is digital gold, and it's a hedge against incessant money printing, right? It's a hedge against incessant bad fiscal policy in not just the U.S. but in the whole world. And so I don't think Bitcoin will be used as a currency. I think stablecoins will be, and I think you're going to continue to see Bitcoin appreciate as long as we have governments that can't spend less than they take in revenue, and we're not even close to that, right? This big beautiful bill is a beautiful bill for lots of people, including if you have a data center and you get a amortized appreciate all your capex in year one, right? There are lots of great business things, right? I think our economy is growing faster. But it doesn't do anything for our long-term debt. And as long as that debt to GDP keeps climbing, you're going to see Bitcoin prices keep climbing.
What about Ethereum? Because that's been on a run as well.
Yeah, listen, Ethereum has a story that's a little different than Bitcoin, which has always been we're going to be the base layer of trust where lots of projects get built on top of. And it's going to be so used by so many different industries and people that it becomes a currency itself, right? And that story's picking up momentum, especially with stable coins, right? A lot of the stable coins will be running on Ethereum rails, and it's a trusted blockchain. And so that, but don't discount the fact that, Joe Lubin and Tom Lee have set up these Ethereum balance sheet companies, treasury companies that have given public market investors real access to not just Ethereum, but staking yield, potentially lending, derivatives on it. And so that's pulling in money. And, prices are set on the margin. And when you have a couple $100 million a day of new money just buying, it draws people in, and you're seeing that happen.
Mike, final question for you. There's a lot of excitement, as you know, and you just described it, around stablecoins. The winner in the public markets around stablecoins right now is Circle. I imagine there's going to be a lot more competition. I don't know. How do you think about that stock, which, of course, has been itself on a rocket ship? But part of me wonders whether it's on a rocket ship, in part because there is no other way, meaningful way in the public markets to play that right now.
Yeah, listen, stable coins are going to be a big deal. It's going to take a while for stable coins as payment coins, as stable coins for AI, AI AI rails to integrate into our financial system, right? And so right now, stablecoins are mostly used for liquidity in the crypto markets, right? They're the oil that allows trading in the crypto markets, and for overseas payments. And in that case, Circle and Tether, the two dominant coins, are probably going to keep their dominance. But over time, JP Morgan is going to have a coin, PayPal is going to have a coin, everyone's going to have a coin, and you're going to see other applications, and then you're going to see, I think, who actually wins this game long term.
Okay.
So yes, I mean, it's an easy, intuitive. I need to play stable coins, and there's one stock that does it. But remember, Coinbase owns roughly 50% of Circle in terms of the revenue flow, right, on the USDC at least. And not to mention, we just launched a European version, which I think in time will pick up.